Back in 2022, the billionaire investor Ray Dalio laid out this whole theory about a coming economic storm based on historical cycles. And, well, he kind of nailed it. Inflation went through the roof, global tensions spiked, and the markets got chaotic, to say the least. But his warning now? It's on a whole other level. He's basically saying the time for predictions is over. The breakdown? It's already started.
Okay, so let's really dig into this quote, because this is not just some dramatic headline for clicks. When Dalio says this, he means we are now, right now, entering the final, irreversible phase of a global debt cycle. This is the part where the old system, the one we've all grown up with, just stops working like it's supposed to. It's a massive claim, so let's unpack the historical blueprint he's using to make it.
So how can he be so certain about all of this? Is he just guessing? Well, not really. In his view, empires and economies don't just fall apart randomly. Nope. They follow a predictable pattern, a kind of blueprint that has repeated itself over and over and over again throughout history. Now this right here, this is fascinating. It's basically the entire life cycle of a world power. You see, it starts with a new world order, like what happened after World War II. That kicks off a big growth phase, leading to peak prosperity. But then, things start to get shaky. Financial imbalances pop up. We're talking massive debt, a huge gap between the rich and the poor. That leads to stage 5, conflict and disorder. That's where Dalio said we were a couple years ago. But now, he's saying we're tipping into stage 6, the final reset, where the whole system is just under too much stress and something has to give.
And this shows you how that breakdown actually happens. It's not like one day everything is fine and the next day there are tanks in the streets. It's an escalation. It starts with things like trade wars, tariffs, you know the drill. Then it morphs into technology wars. Look at the fight over computer chips right now. Then you get to capital wars, where money itself becomes a weapon. Think about Russia's frozen assets. All of this, it's already happening. The last 2 stages, geopolitical and military wars, they're just the final, explosive result of tensions that have been building for years.
So let's pivot to the most immediate symptom of this whole breakdown, the one Dalio thinks is the real powder keg. Because while all this global conflict is a huge piece of the puzzle, the engine that's really driving this crisis is happening right on the national balance sheet. Take a look at that number, $38.7 trillion. That is the current U.S. national debt. It's a number so big, it's honestly hard to even process. To try and put it in perspective, it's growing by about $8 billion every single day. That's over $113,000 of debt for every man, woman, and child in the country. And carrying that debt has a staggering cost. And this is that cost. Over $1 trillion a year. That's what we're now paying, just in interest, just to service the debt we already have. Let that sink in. That is more than the entire national defense budget. We are spending more money on interest payments than we are to fund our entire military. This is the financial pressure cooker that Dalio keeps pointing to. So what gives? This is where you get this really dangerous feedback loop. You see, throughout history, when countries get this deep in debt, they don't usually just default. They turn on the money printers. They print cash to pay the bills. But what does that do? It devalues the currency, which means next year they have to print even more money to cover the same costs. That is the debt spiral. And it is a classic sign that an economic reset is on the horizon. And Dalio really doesn't mince words here. This isn't some abstract problem for economists to debate. This is a very real burden that is being kicked down the road to future generations. They're the ones who are going to be stuck paying this back, and they'll be paying it with money that is worth less and less. It's the kind of crisis, he says, that builds so slowly you barely notice it until it happens all at once. Okay, so that's the problem. It's huge, it's messy, and it's already happening. So, given this monumental challenge, Dalio sees 3 potential ways this could all play out. And just to make it interesting, there's one wild card in the deck that could change the entire game. This slide lays out the choices really clearly. Path number 1 is the disorderly decline. That's the do-nothing option. We just keep kicking the can down the road until we run out of road. That probably ends with a major market correction, maybe 20 to 40%, and a pretty rapid shift in global power. Path 2, a managed decline, is a bit more hopeful. It would require leaders to actually work together and make some tough cuts. It means slower growth, but at least we'd have stability. And then you have Path 3, renewal. That's the dream scenario, right? But it would take a level of national unity and a productivity boom that, let's be honest, feels pretty unlikely right now. But there is this other possibility. a get-out-of-jail-free card that could rewrite all the rules, an AI-powered productivity boom. I mean, if AI can really make us 5 or 10 times more productive, it could create so much new wealth and abundance that it basically pays off the debt for us. But, and this is a huge catch, it only works if that new wealth gets shared pretty broadly. If all those AI gains just funnel to the very, very top, it could actually make the wealth gap and the whole problem 100 times worse. So that is the massive 30,000-foot view of the world. And it's a lot to take in. So let's bring it all back down to earth. What in the world does any of this mean for you? For your savings, your retirement, your financial future? Let's get practical. So in this kind of environment, Dalio's advice has been pretty aggressive. He's been telling people to sell government bonds and buy hard assets, things governments can't just print more of, like gold. But here's the thing you absolutely have to remember. He's a billionaire running a hedge fund. For most of us, for the average person, going all in on one thing, even gold, is an incredibly risky move. The smarter play for pretty much everyone else is the exact opposite: diversification. Spread your money across lots of different things, stocks, real estate, maybe a little crypto, so that if one part of the market gets crushed, you're not completely wiped out. Okay, so let's boil this all down. What should you actually take away from this? First, don't panic. Seriously. These cycles Dalio talks about, they play out over decades, not days or months. Second, your best defense is a good offense. And in investing, that means diversification. And finally, you gotta remember this isn't some doomsday prophecy. It's a wake-up call to be aware and to adapt. History shows us, time and again, that in moments of great change, the people who come out on top aren't the ones who pretend nothing is changing. They're the ones who are prepared for what might come next. So at the end of the day, whether Ray Dalio turns out to be 100% right, partially right, or totally wrong, the core message is still incredibly powerful. The world is changing. The old rules might not apply anymore. So the real question this leaves us with isn't about perfectly predicting the future. It's about whether we're resilient and prepared enough to handle that future, whatever it decides to throw at us.